elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, guys? Late night video, Patreon promotional, Sofi, is it a buy? All right, we're going to talk about it. We're going to talk about the earnings. We'll go over that. We'll talk about some other indicators and so forth moving forward on some projections that I have. And we're going to talk about projections that I had in the past, okay, and how they relate to now. All right, so if you're watching this on YouTube, welcome. In fact, Patreon members, I'm going to put down a vote down below on whether this is going to go on YouTube or not. All right. So if you're seeing this on YouTube, that means that my members said yes, it will go onto YouTube later. To my actual members on the Patreon, for this one, I'm putting the ball in your court to create. If you want to create more exclusivity on the Patreon for more organic, intrinsic value of content, there you go. If you want to create more demand for the actual slots you guys hold and your memberships and so forth, you could do that too. So I'll put the actual vote down there. All right, SoFi. All right, let's talk about it. Stocks going down. Seeing some activity on the Patreon saying, probably buying this thing, maybe not. I wanted to touch up on it. Earnings came in strong, triple beat, just like I projected. Top and bottom, margin expansion, beating analyst consensus estimates, all right, and so forth. Just not too long ago, analysts had this in 2026 growing 24%, all right. Analysts have been very bearish on this equity. The street is very fickle on SoFi. In fact, I was calling that a lot of the game was rigged years ago. All right. If you go back on some of my SoFi videos in the past, and you can probably see it. All right. Not much has changed. Okay. The street is stalling on this a little bit. Now, what is the main reason why the stock is down? All right. So whenever the stock is down, you always have to ask yourself the question, why? All right. Well, we've had mass market sell off, so there's some of that too. 3 billion equity raise. And according to actual earnings call, I digested the earnings and everything. They're going to raise OPEX, CAPEX, marketing spend. Cost to customer acquisition will go up if the growth does not outpace the cost of customer acquisition. With the actual combination of a 3 billion equity raise and hired OPEX and more investment, it garners more uncertainty, more execution risk, and a bit of dilution pressure on the EPS of GAAP EPS downside and so forth. So a little bit warranted that the equity is going to go down. Understandable. All right. But is it down enough? All right. Is it down enough to scoop shares or what have you? I think it depends. And we'll talk about that later on in the end of the video. All right. So going off the earnings, okay. Something that I caught on to. All right. Reginald Smith, JP Morgan and Chase. All right. He's one of the analysts for SoFi. All right. Probably jacked up his name, but whatever. I honestly don't care. And yes, that's a little slight. This is not really an analyst that I like. All right. But we'll get into that in a second. He hit, in fact, so ironic that one of the analysts that I really don't like is hitting up on the question of the weakness of the thesis. Me as a SoFi shareholder, this is the metric I'm looking at. All right. Not necessarily worried, but I'm always looking at it. Tech platform growth. He's curious. Do you think the innovation that we're seeing on the fintech side could spur more interest and demand from your platform, tech platform customers? All right. So, rule of 40 metrics. We'll go to the earnings presentation. Okay. And let me pull it up here. And this is the annualized basis. So, management is trying to sell this rule of 40. All right. I got news, all right? And this isn't really news if you've been following me for a while. The street is not going to give Rule of 40 credit to SoFi if the tech platform growth is not scaling as fast as all your loan segments and financial services and so forth, all right? Rule of 40 is a tech SaaS multiple, rule combo that allows the street to start bypassing or overriding PE metrics and start pricing the actual company on a price to sales multiple years out in the future due to the actual safe combination. Remember, the safer the profit, all right, safer the dollar earned, the more expensive it's going to be. The more riskier the dollar earned, the cheaper it's going to be. Okay. So take that under consideration. Once again, I reiterate, if tech platform growth is not going to CAGR and all these other lines of business segments are out scaling tech platform growth, sales within the tech platform don't make up enough of the pie of the whole business segment. Rule of 40 is going to be a hard sell to the street. And quite frankly, it's a hard sell to me too. All right. So, and this is someone who actually is a shareholder. In fact, I'll disclose it. All right. Quick disclosure: I am a shareholder of SoFi. I hold 2,000 shares. Cost base is $7.75. All right. So there that is. You see it right there. All right. So going back to it. All right. Strong results either way. Just because it's a bank of today and a fintech of tomorrow, you know, even if they don't scale tech platform growth, within a short amount of time, doesn't necessarily mean that this company can't garner strong returns. All right. So that's something to consider. But just know that when you go to evaluation metrics, they're not going to get that sexy tech SaaS multiple from a rule of 40 of 25 times sales if they do not meet that metric with that tech platform growth. You see, all right. That's not to say that they can't do it years from now, maybe 2027, 2028. That tech platform starts, hitting its growth cycle and starts spurring growth. All right. That can be, gasoline to be lit on the fire to SoFi's premium multiple on the stock price. All right. But that's yet to be seen. All right. And I believe we will see it. But that's just something I had to point out. And this analyst, Mr. Smith, all right. This is the Mr. Smith of the Matrix. All right. So this is my interpretation of skill. All right. Keep in mind, he's an employee that's good at math and understands the metrics. He has an MBA in finance, and so forth. So he's heavy on the quant. He's skilled and heavy on the quant, but he's not skilled and heavy on investor vision, you see. I'm an actual higher level growth investor that's able to value stories, IP, vision, and so forth, and see more vision. Um, this guy's got a buy rating on Lending Club. All right. So if we look at Lending Club, his actual upside is all quant based, you see. All right. Price to sales metric undervalued, clean balance sheet. All right. But growth rates, I mean, yeah, I mean it's probably undervalued on a quant basis, but actual story wise and vision wise, Lending Club, I don't see it. Now, keep in mind, I haven't really done a deep dive on Lending Club, but quant basis and everything, that's probably where he's getting his numbers. All right. All right, let's go to the actual. Let's talk about some technicals on SoFi, and I want to talk about more so how I read into technicals. I'm not going to get too much into it, all right, but a little bit into it. All right, we'll go into the chart. 200-day moving average. SoFi is about to intercept that 200-day moving average to hit this little support line right here and this support line up here. So there's going to be there'll be some support on this portion right here going into the 22s, if you will. All right. Where do I think that this stock can go? I think it could go lower than that, but it's probably not too much. We're probably going to see a little bit above maybe $20, if that. It just all depends, and there is some macro dynamics and the Fed and interest rates and so forth that heavily can impact this equity um, going into the actual first half of 2026. But all in all, that's where that is. Now, can we blow past this? Can we blow past this support and actually take a dive down? Sure, but I don't see it. You know, SoFi management, they're firing all cylinders. They're doing good. And that actual 3 billion equity raise, believe it or not, will provide support to the equity. SoFi now has a refreshed balance sheet. All right. So they got 4.9 billion in cash and cash equivalents. And we'll go down to debt. Debt is at 1.9 billion, all right, on their total debt. So not too bad. Now they're refreshed with net cash. Their actual loan loss ratio reserves are well above regulatory mandate. I think in fact they probably have I think they have a slide on this, if I recall. All right. See if I can find it on this. There it is. All right. So there is their required minimum by percentage, and there's their ratios. All right. So good to go there. All right. Now let's talk about some other stuff that I caught on with the earnings. Management is guiding 30% revenue growth CAGR. Okay. 30% year over year CAGR all throughout 2028. All right. So let's see if I can find that here. There it is. There it is. At least 30% from 2025 to 2028, and adjusted earnings per share growth of 38% to 42%, 2025 to 2028. That's good. We're right in line with it. Now, that's enough EPS growth to do it. Now, let's go back to price targeting that I had. Here are the price targeting projections that I made in 2023. Nothing has changed. I have not changed my original price target from 2023. That's how I do things. So when I'm entering the position and I'm getting in there, I'm doing the price targeting for a 5-year out price target. All right. I'm running my calculations and so forth, and I'm sticking to it. I don't change it. I'm not allowed to. That's my own internal rule to myself. So keep in mind, as you can see, I have a dilution target here too. So 2023, we're going to see how spot on I am. All right. In 2023, I projected this. We're in 2026 now. We closed out 2025. They beat on their actual growth rate, sales growth by 37%. All right. Or I'm sorry, they beat it by, to be more accurate, 37 minus 21. And this is really 37.8 something. So that's a rounding error on the better side. So they beat it by 16%. All right. Equity is already pricing in the actual base case here, um, on some of this target right here. On the bull case, all right, we're still on track. They're beating the bull case. My bull case, I had them CAGRing 25% throughout 2028. So they're guiding above my bull case that I made in 2023. Real good stuff, all right? Now, my bull case assumed 50% dilution target, all right? I don't think that's going to happen, all right? We'll go back. So year one, I projected 1121. Year two, and year one is for 2024. All right. Year two, my original projection, 1,222 shares, 90.91. All right. And that's the end of 2025. Let's look at the financials to see how accurate or where I land. All right. All right. So, all right. Excuse me. Bear with me. All right, here we are. Basic weighted average shares current 1,222.8. So crazy. My actual dilution target is right in line on my base case. All right. We still landed at 1,222. I have them CAGRing 9% compounded annual growth of shares on dilution. All right. So I projected equity raise to happen right around here. All right. So there's that to consider. So let's talk about price action, about what I think SoFi will do by the end of the year. All right. So let's say they do 30%. All right. Let's say they do 30%. They grow members, cost of customer acquisition is good. It's not excellent with their new marketing spend and so forth. If they just hit 30%, I got them at $35. All right. From here at the end of the year. If they exceed 30% and so forth, and margins hold, and maybe they expand a little bit, maybe they do 35%, they beat their guidance, which I believe that the management team is sandbagging. I do believe it. All right. And I believe they did that on purpose right now. All right. PFUs, their stock units of PFUs are due in summer of 2026. So they're probably going to accelerate guidance and so forth, and they're going to start outperforming. It's going to be pedal to the metal for them, all right? Because it's their incentive on the line, all right? I got the stock at $40 by the end of the year, all right? I got the stock $40 by the end of the year, probably going to hit 40 maybe in the late summer. This thing runs to $30, $35 June, July, August, September, or that last Q4 arena and calendar Q4, that October through December timeline. I think stock's going to be $40. All right. Barring some existential events, the next bird flu or some market crash, I got stock at $40. So that's just me. So is it a buy? Well, for someone like me that took the risk and built his position years ago on an average up and so forth, me personally, I'm not an investor that likes to average up. And the investors coming in right here are going to take executional risk on that 3 billion dilution and the raise of customer acquisitional costs through marketing spend and so forth. So those investors are going to be taking executional risk there. Honestly, those investors taking executional risk are probably in a good spot because I think SoFi is going to do well. I think they got several years of upcycled on their growth trajectory, on their growth cycle. All right. So there's that. So for me, it's a hold personally. Why? Well, me personally, I'm an investor that likes to triple and quadruple pretty quick. All right. So I mean, there's the results right there. If you can, And this is even after the market downturn. All right. Just last week, this portfolio was 300 G's. All right. And I am working on this monster right here. I will put out a video on this probably next week on this actual ticker right here. S on my chest. There can only be one. All right. I will put out a video on that. So there that is. But all in all, there's more attractive opportunity out there for me in the market as averse to averaging up in SoFi. But for someone who wants to have exposure in the banking, in the financial sector and have a good, actually a great investment proposition in a great management team in a great company, you know, I couldn't fault them if they didn't have a position for starting to buy some shares and build up their position. All right. So that's just what I have. All right. So hold for me, maybe buy for other people. I don't tell people what to do, never have, never will. But for me, it's a hold. What would it take for me to buy shares of SoFi? All right. How low does the equity need to go? All right. Um, Needs to go right here on this level of support, guys. All right. I'm just going to keep it real. You're always going to get honesty with me. Actually, right here, too, I might start scooping shares right here. If we get into, and this was April, May, it's about 8-9 months ago. Okay. Right around these levels, I'd be scooping up shares and I'd probably double my position to about, I'll make it 4,000 shares. So I'll scoop 2,000 shares more, probably, if it ever gets to those levels. And I will scoop it probably fairly quick because it'll probably be short-lived, probably stay there for about a month or 2 weeks to a month if it ever gets there. What would it take and what are the probabilities? Probabilities are very slight. I don't see it going down to that level. I can't see it breaking 20 below 20. I can see it getting in the 20s, but I can't see it breaking below the 20s. All right, into the teens. I can't see it. All right. So investors coming in right in this little sweet spot right here. In fact, right now, the $22 level to the $20 to $22 level, lot of support cushion right there. Shares probably not going to see too much red. That's just what I anticipate. All right. If you're getting value out of it, like and subscribe, thumbs up the video, check out my Patreon. I got the Arrow deep dive part 3 coming up. All right. And that'll be posting, and I got other ticker analysis coming up on the actual Patreon as well. All right. So all my Patreon members, I love y'all. I appreciate everything. Actually, something happened. A slot opened up. Someone left. All right. So if this goes on YouTube and you're watching it, there's one slot right there. All right. Market took a downturn. Someone didn't like that and they just left. All right. It is what it is. So be sure to take advantage of that. All right. With that being said, I love y'all. Thank you all for your support. It means the world to me. And with that being said, take it easy.